All right. Good morning. Good morning. Good morning, everybody. Somebody give me a sound check. Let me know if you guys hear me okay, if the visuals are good, if everything is all right. Good morning, everyone. Starting a little early. Got a lot of really cool stuff to share with you. How's everybody doing? So, sound check. Sound check, sound check, mic check, mic check. Good morning, Andy. Good morning, Park. Good to see you guys. All right, we're going to let everybody crawl into the room here. I think I have a tiny little, I have a long Nasdaq at 275. We'll see if that trade is going to be working. It's a second buy on this. A lot of people are talking about gold today, and I have some really interesting thoughts about how to trade gold. Somebody's saying that gold may be turning around. It is indeed given us what I would call a turn signal. And I'm going to share with you how we can use our labels to determine the dominant trend and to actually trade in the direction of the dominant trend until it stops, and then trade in the other direction, with the same functionality. So actually, as a matter of fact, we got a gold trade right here. How much time do I have here? Didn't quite materialize. I was looking for a red zone. If it goes to red zone, we'll short the gold trade over here in just 1 second. But I'm going to talk about the mechanics of this. It's going to be really, really interesting. I think you guys are going to find it super valuable. I started a little bit early, so we're going to let everybody come into the room here. It's going to take a little while for everybody to crawl in. Those of you who may want the prop guide or the video to explanation of how I trade scalper, all of those things are over here. Let me actually get this a little bit bigger. I think you guys want this probably a little bit bigger, right? How's this? How's the visuals on this? Is this nice and big? You guys can see the screen pretty well. Let me see if you can see this. You see the positions pretty well? Yeah, you can. Right? Looks pretty good, right? Okay. All right. Oh, gotta sell. I really shouldn't be doing this. I don't want to be taking. Remember, I said I don't want to be taking any trades 9:15 to 9:45, but it's kind of tempting. I got a sell trade here. Maybe we'll take it. Why not? Why not? After all, oh, there's a big candle too. It's kind of a big sell candle. It's working. We'll take it. 12 seconds left on this candle. I'm going to try and take this candle if it stays here. 4 or 5 seconds. All right, sell.
Order filled.
In at 75. In at 50. Targeting 7050. That's a big, big candle. It's ripe for a retrace and ripe to stuff me. But, why not? What fun is it if we don't trade? Good morning, Bob. Good morning, Andy. Good morning, everybody. I have a really, really good idea to kind of share with you in terms of what is the, when do you want to trade longs? When do you want to trade shorts? How do you want to determine the trend? Using our own labels, and also some really, really cool stuff I got to show you. I totally stumbled across on using labels on a much longer term basis. I had no idea you could apply them on a longer term basis, but it really works on a daily charts super well. I'm going to show it to you in just a minute. Kind of putzing around with this. 750 is the target here. And we'll see. Whatever, it works. It works. It doesn't work. It doesn't work. There's a really, really huge candle, right? So we could have a retrace. Was it 850? I came in at 850. I'm looking for 750. All right, let's see if this comes in. I know what I'm going to take this off.
Field.
I'm going to take it off at 80. Not, it probably goes my way, but there's two things I shouldn't be doing. One is trading 915 to 945, and two, trading after like a massive down, really huge, massive candles. So screw it. We took 125 out of this trade instead of the full 250, but I'll take it. Who cares? It probably goes to 750 anyways, but there's no reason to tempt fate on any of this stuff. Good morning, everybody. Good morning, everybody. We got so much cool stuff to show you. Let me clean this up here. Let's go to settings and let me just clean. Let me just check executions. Okay, we'll take executions off. That's fine. I want to have a clean sheet with you guys because I want to show you something very cool in terms of how do you determine trend using labels. Actually, before we do this, I want to show you something really, really cool. So let's go to gold, right? This is gold CFD, just because I want to go, back.
Stock filled.
So that was my NASDAQ. It's nothing. This is gold on a daily chart. Okay, daily chart, right? Look how well the labels work. Now, obviously, the sell labels don't work very well, but that doesn't matter because if you just simply use the following parameter, okay, this is such an interesting approach for those of you guys who want to trade much longer term structures. You trade entry on the label, exit on when the candle touches or closes near at or touches the moving average, right? So in this particular case, I'm entry on the label, right? And the candle sort of, closes near the moving average right over here. So I would be in at 91. I'm exiting all the way out at 367. It's like a 200-point move. Here I'm coming in at 304, and I'm basically out at 27. So fine, I lose $20. Here I'm coming in at 384, and I come out at pretty much flat because in this case it doesn't really, go much. And this is a typical swing trading structure where you have, your 50-50, but on the ones that win, you win just huge. So, here you're coming in at 328, you close yourself out at 349. Okay, you lose another 20. Here you're coming in at 63 and you're out at 409. You win 40. Here you're coming in at 47. You're out at 94. You win another 50. Here you're coming in at 73 and you're out at 40, which is another 70. So you got like 50, 70, 100, flat, minus 20, minus 40, right? So you got like since April, you basically had, what is that? 50, 70, 100, 170, 100, 230, basically, 190 points of gold with very, very limited risk, like, $30, $40 against you on risk in a super, super long-term structure. I'm actually curious. Let's take a look at NASDAQ. I'm actually curious if that works on NASDAQ. And it kind of really does. Look at this. You're coming in at sell over here at 524. All right, fine. You're basically flat, maybe a little bit, in the money, 480. Then you're coming in here at 18,073, and you're out at 600 points higher. Here you're basically flat. You're coming in at 356. You're out at 100 points down. Here you would be also flat. Maybe a little bit less. 813 against. You minus 200 points. Same thing over here. You just the thing with NASDAQ obviously is that you're retracing much harder, right? So you're coming in 829. What is this? No, 1800, and you're down 400 on this. This is flat, and this one is 800. You would have been 500 up. 500 up on the money. This is interesting because when you're looking at NASDAQ and this kind of a situation, it almost begs for not trailing the moving average. You just simply look for one of my other thought when I was looking at all this stuff on a longer term basis was, and this is, by the way, I'm just showing you guys daily charts, big moves using the labels, is to simply use one-time risk of labels. So if I'm coming in at 505, the top of this label is 825. So let's say it's a 300 point risk. Gold buy. Okay, we're not going to take that gold buy. I'm going to explain to you why not. Actually, you know what? Let me just look. Sorry. No, we should take this gold buy. Sorry, I'm late on this. Let's see if we can.
Order filled.
All right, let's see if we may be a little bit late on this, but let's see. It's the target is going to be 74.1. No, it's a legit buy. Okay, is everybody in the room now? Finally, I want to. So I was talking about the longer term structures. We'll go back to the longer term structures, but I kind of wanted to show you how we can use labels. I had this really interesting insight into figuring out whether we should be taking the buy signals or should be taking the sell signals as they are appearing, right? Like, what's the dominant trend? What's the highest probability of us getting the trade done? And here's my thought. So let's go back over here, and I don't know. Okay, yeah. So here's a good idea. 5:30 in the morning. I'm just gonna pull it out randomly. 5:30 in the morning, I get a sell signal here, and I get stopped out. It's obvious. It's just there's no continuity in sell signal, right? So the trade fails. There is no continuity. I don't make my take profit. What do I take away from that? Well, a way to filter out for future sell signals. In other words, you say to yourself, okay, I got so we got done on the gold, and I'll explain to you why I took the gold and why the gold worked, right? Here I think I'm on the settings, executions. There, gold worked, nice and clean. So why would you? So you're in this sell zone, you get stopped out. The next question yourself is, should I take the next sell signal? And the answer is no. Even though this next sell signal actually works, the answer is no, because now after you get stopped out on sell, what you want to happen, and this is a really interesting filter, is you want to have 2 consecutive sell labels go to profit. So you have one over here that goes to profit. No, it doesn't. Not the case. This one does go to profit, but you don't have a second consecutive sell signal. Only over here, this sell signal both go to profit. That gives you a reasonable chance that the whole tilt of the market may be moving over towards the sell side, right? So now the sellers may have more control over the market. In the meantime, the buy signals are all working, right? Now, here's a good example. The buy signal, let's say this buy signal doesn't work, right? I go 66 and it stops me out. Let's just, for argument's sake, it stops me out. It actually works, but let's just say it stops me out. How do I prepare myself for the next condition? Well, same thing. I want to have 2 consecutive buys go to target. So I don't take this one. I kind of watch this and I say, okay, these 2 consecutive buys went to target. And actually, in this particular case, I get screwed. These 2 consecutive buys go to target. Then I go next on this one buy. I get stopped again. So now I have to wait again for 2 consecutive buys go to target. Then I feel much better about all the buy signals, going forward. I can take this buy signal as my first buy signal. And I guess this buy signal as my buy signal now. That's the buy signal that I took. Because as long as my first buy signals are working, I am willing to take the first buy signal in my structure. So again, even with filters, it's not like it works perfectly, but what it does is it gives you much greater confidence that that the buy trade is dominant right now. So in this case, it took a little while to confirm that the buy trade was dominant, but it definitely is dominant in this case. And the way you want to think about this is that the 2 consecutive buys really show you there's a potential, buy trend in place, which means that the next buy labels that you're taking should all work. In this case, by the way, the filter itself killed me. So, I took I would have said, okay, I want to go long buys, and this kind of would have stopped me out, so be it. So then you have to stay very patient, look for 2 more buy signals. This now becomes not a buy signal because obviously it's a third in a sequence. You look for the first one in the sequence, and this one is the first one in the sequence. You get long here, you get long here on the second one, and you keep going. So that's sort of a way to determine, what trend is dominant in the marketplace right now, right? And actually, like here's a good example. When you're looking at S&P, right? So you have 2 cells that worked, right? By the way, where am I looking at here? All right, from 5 o'clock onward, European session. So blah 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 blah. I'm just looking to see 2 cells that work. This cell works. 2 buys that work. This buy, I think, actually did work. Was it 1175, 1250? No, maybe it just came up short. This buy came up short. So you would have been stopped out on this buy. And now you would have had to have 2 buys consecutive to feel confident. And this buy over here would have worked. This was a 13. It went all the way up to 14, and it would have worked, right? And so now, and I think this buy where I took this buy, this is a very, very effusive buy. And this buy sort of worked. And basically, you keep trading the structures that worked. And by the way, the cells also work. So you have 2 cells, they work. This cell worked to the downside. You can see this cell worked to the downside. Right now, both buys and sells are working. The moment you get stopped out in a sell, so I guess the way you want to think about it is the moment you get stopped out in a sell, then you want to wait for 2 consecutive sells to confirm to you that sells are starting to work again. The moment you get stopped out on a buy, you wait for 2 consecutive buys to give you confirmation that buys are starting to work again. The advantage of that is that you definitely, once you commit to the buys again, you definitely have much greater confidence that those buys are going to be working. The disadvantage is, of course, that you may be missing a couple of positive trades in the meantime. But the other advantage of this is, what if you're in a situation where the buys just keep failing? You're in a basically very, very strong downtrend, and every buy is just sort of a very weak, non-continuous move. Well, you avoid 1 stop, 2 stops, maybe even 3 stops on very weak buys. We've seen that, where you have a buy label, it just doesn't go anywhere. Buy label doesn't go anywhere. Buy label doesn't go anywhere. So using this kind of a 2 buy filter really does help you. The whole idea is to help you avoid as many unnecessary stops as possible. That is, weak longs or weak shorts as possible, and because you only want to take the strong shorts and the strong longs. So as I said, right now, everything is operating in a situation where both buys and sells are working because there's enough continuity on both sides, on both labels. So if we get like right now where, we have 1 sell label, we're definitely not going to take any trades right now at, 9:31. But like, let's say 9:45, there's a second sell label. I'll take it. We'll take that as a trade. And by the way, look at this. I gave up this at 08, and it definitely went down all the way to 750. So, I got out a little bit too early. The point being is that we're always looking for the highest chance of continuity, and we want to confirm that as much as possible with the most recent history, right? No, I don't take the third or the fourth. And again, it's not that they don't work. It's that I'm, again, looking for just absolutely the strongest possibility of profit. Because the third and the fourth sometimes work really, really well. But by the third and the fourth, you also have a stronger chance of failure, right? Definitely a stronger chance of failure. And this, by the way, applies only to the continuity trades. The reversal trades start to kick in after kind of like the third or the fourth label, right? In this particular case, by the way, I think like here's the third label, right? This would have worked. You went short here at 1275, and I guess Yeah, 1175. You were able just to barely make a point, and then this one would have been very, very clean. First red, second red over here, easily fell. Usually like by the fourth label, you have a very high probability that things are going to work. We're really dumping very hard here. What's up here, guys? I don't know. Interesting. First 3 minutes of the day, we're really dumping hard. So we'll see. We're going to be looking for sell labels over here because we have a first sell label. All the sell labels have resolved positively. But when I mean all the sell labels have resolved positively, the question I'm answering is the first sell label in the sequence profitable? And as long as that answer is yes, I keep selling. Is the first buy label in this sequence profitable? As long as that answer is yes, I keep buying. If the answer becomes no, if the first buy label in the sequence fails, then I wait for 2 consecutive buy labels to become profitable before I engage on into the first buy label. That's kind of like the rule that I'm looking at as a filter rule. Hey, Ray. Ray, email me. I don't know why you don't have access to indicators. Hey, are you checking your emails? Because usually I sent you a very specific email you should have gotten from me. Has a step 1, step 2 all laid out. But if you have questions for me, just and check your emails, because very often you people are just not checking your emails, and then you're going like, where's my stuff? It's a two-way street. So contact thebktraders.com. Just email me right now, Ray, and then after the show, I'll be happy to take care of you. All right, big drop, guys. Wow. 50 basis points on this move here. And we're just going to, sit here and be very, very, very patient. Gold is just spiking. Is there news? Do we have news? What's up here? It's really interesting. The market open over here. Tweet senior White House officials tells me the United States has indication Iran is preparing imminently to launch a ballistic missile against Israel. That's what's going on. Okay. Good luck. Nice. Very nice. I guess they're looking to just be completely annihilated. Okay. Interesting. Okay. So that's why gold is spiking, because Iranians decided they wanted to get dirty. Well, we'll see. I guess we can say goodbye to Tehran in a little bit. Okay. So that's what's going on here, guys. That's why everything is falling really, really hard. Now we have to just be very patient. This is actually a great, a great way for us to trade, because now we're going to be trading news flow, which is something we can really do well with labels as well, right? So news flow is continuous by its very nature, or reversible by its very nature. And so we're going to be looking at continuity or reversal signals in all of this as a possibility. Yeah, why is gold? You said gold is down? I haven't looked at gold. No, gold is like very, very little reacting. Gold doesn't really care. I'm sorry, oil doesn't really care. No, it's not the port strike. Everybody knew about the port strike. It's much more the fact that Iranians are going to try and launch a missile, which just is going to invite the mother of all bombings out of Israel. I mean, if they decide to put a ballistic missile on Israel, I'm actually surprised that oil isn't. Well, oil is starting to spike. There we go. Oil is starting to really, really spike here, because oil is definitely reacting. So is gold. Yeah, we're really starting to dump everybody. This is, a World War III reaction. Ironically enough, I think, I mean, this is a typical knee-jerk reaction of the market. But if this does happen, you never know. But in my geopolitical view, this is actually going to create the best positive reaction, not negative reaction. In a sense, that if Iranians really do fall for this trap and start sending an interballistic missile, that opens the door for Israelis to just bomb the living shit out of them. Every facility, every condition, all their nuclear facilities, and that takes them out forever as as an agent of chaos in the Middle East. I wouldn't be surprised if the Saudis joined the Israelis in bombing the living fuck out of them. And while you're going to have immediate engagement, the end result of this is just going to be complete annihilation of them as a power. I kind of feel they fell for that trap. Maybe I'm wrong, but it doesn't seem to me this way. The Israeli military might is just so much stronger, and they have all the intelligence on all their. They've just been waiting for a chance to knock them out of permanently. So we'll see. Ruben, no, I'm not I can't help you on Chat GPT. It's not we're live trading now. The stuff that I do for Chat GPT and all the other stuff that, that I show you guys, it's really free. If you want to become a member and you have some issues with the products, that we have, then I'm happy to support you, but I can't be doing Chat GPT support with you guys. What just happened in the last few minutes, Brian? Report that Iranians are trying to put an intercontinental ballistic missile against Israel, which just invites, massive military retaliation. So it's just basically market reacting to World War III fears, which is what's going on. So we got a super negative here. I mean, not super negative. It's less than 1%, but it's definitely enough to come down. So we're watching. Right now, obviously, we had such a serious sell-off that I don't have any. Let me get a little bit bigger here. I don't have any signals here because they're also oversold. Oh, I had a sell signal here. I should have. I guess, did that pop up? I guess I didn't see it on the YM. I guess we can do this. We can try and let's see. Did this go down short? I'm going to sell market.
Order filled.
So I'm short YM. I mean, again, for shits and giggles here, this is a sell label. This is a follow-on trade because it's a second move into the red zone here with a TP of 359, right, on the YM. Just because I want to show you the trades that would be reasonable within this environment. I'm generally trading the ES. I don't trade the YM, but YM came up as an opportunity, so I'll take it with you guys, and we'll see if this trade works on. The idea here is we have a big news event. We have a sell label here. This sell label here would have obviously worked. And then this is just simply a follow-on trade because, once you have a sell label, the second time it goes into the red zone, it's a legitimate trade. But, volatility here could retrace us out just as easily. We'll have to see if this thing survives the volatility. Oh, now we have, oops, sorry. Damn it. Sorry. The real trade that I wanted was this one. I missed it. I can't trade this. This is too far away. This would have been the trade that that would have worked. Sorry. This trade is the one that would have worked. So now let's wait and let's see if we can get a follow-on trade on this this would have been what, 74.75. Actually,
Order filled.
All right. Damn it. Sorry, guys. I'm fucking around. I'm chasing these trades because I want to make them for you. But they're not working. This is not going to work. This is not going to work. It's too much volatility into the close. I should have been much more patient on this. Let me be patient on the next one and just come in and trade this properly. Yeah, I got stopped on this. This did not work. The trade should have been here to here. I let myself go here. Market now is reversing off of a big sell move. So unless now the real trade is going to be into the red zone over here. So I'm not gonna get emotional and start trading just to show you trades. I'm going to start hunting these trades properly. Especially after a very large move to the downside, the second sell label is always going to be very vulnerable to a retrace. So we want to be very patient here and make sure that we get a second sell condition before we start entering trades. All right, are we getting into the red zone? I'm watching this very carefully. So let's watch this very carefully. No red zone yet. $11 seconds, staying in the red zone. 8 seconds, not red zone. 5 seconds, still in the green zone. Okay, went red zone? No, still green zone. Now I just went into the red zone. Gonna have to wait. Unfortunately, markets don't always cooperate the way you want it, but now I'm gonna be very patient. This is the first candle in the red zone. So I'm gonna have to hold and wait to make sure that it stays there and trade it. It's really, it pisses me off because now it's obviously just dumping. I would have loved to have been in here, but it just did not give me that signal. 19, 20 seconds, 16 seconds, 15 seconds.
Order filled.
All right, now I'm obviously always very much vulnerable to a retrace after such a big move, and I'm going to get retraced out. It's just, fuck, I hate that. I knew it was going to happen, but again, I want to stick to my rules and just show you good, better, or indifferent, because it got done, and so that was great. So that did get done on we sold at 69.25, bought 68.25, just barely. The risk of this, let me just take off the labels because it's really hard to see. No, hold on a second. What is this? Settings. Oh, sorry. I want this. I want to take off this. So, you have theory and then you have reality. And reality sometimes does not comply to theory. And all you hope for is that most of the time you have a plausible result in reality that's supposed to go to theory. So here's a good example of how markets can always torture you. You have a sell label, right? I missed the sell label. That's fine. That was just my own fault. I could have taken this sell label. That would have been easily +1. Then the next candle over here doesn't quite go into the red zone. So I hold off, which means now I'm coming in over here at a massive red candle, which has a strong retrace against it, right? Fortunately, my 3-point stop was just big enough to survive the retrace before it starts to dump and gives me the take profit. But it couldn't have, it may not have been. Would that have been a bad trade? No, it was a legitimate trade. It was just simply the volatility of the market in this particular price action did not work. And you will get that. That's the whole thing about live trading. It's the whole thing about trading is you have the best ideas possible. They may not work because of volatility. It's what I call being right on the trade and wrong on the stop. That happens. That obviously happens a lot more in Nasdaq, which is why I like trading the S&P much more. But you just have to accept it. If it's 1 out of 100 trades, what do you care? You're going to make it back, right? But there was nothing wrong with this trade except the fact that it was highly volatile trade, and you knew there was going to be a danger coming in. I just wanted to explain that, and I got out. I don't have any signals on gold, Andy. The last signal was over here, which was massive buy signal. Oh, Nasdaq is getting a sell signal. Let's get involved here. All right. So how much time do we have? 7 seconds left. Nope, no sell signal. Oh, and this is what I mean about you have to really, really be careful. Oh no, it did give me a sell signal. Okay. Shit.
Order filled.
Oh, I'm on the wrong one. Damn it.
Order filled.
Never mind. Okay, never mind. I'm not. I took the wrong trade anyway, so it doesn't matter. Sorry, guys. I was on the. I wasn't paying attention. Okay, Nasdaq. Sell market.
Order filled.
Now I am short this. Why? Because it's above my sell signal, right?
Order filled.
And it got done. And it's a very, very good example of what I like to do, which is that if I get a sell signal, let's say I miss it, but it's a legit sell signal, and I have a higher entry price. If I'm a lower entry price, it's obviously bad risk. But if I'm at a higher entry price, then it's pretty easy for me to try this, and made target, right? See if there's any more news on Iran. Okay, wow, there's a lot of news here. IDF says it's conducted precise strike and blah blah blah. It appears to be an attempt by U.S. to frustrate Iran's plans, declassifying secret intelligence for this purpose is a recent trend. So this is U.S. has indication that Iran is preeminently. So I guess this was a U.S. intelligence. So they haven't really fired it. So U.S. basically disclosed intelligence on Iran, but they haven't fired it. That's what created all of this hoopla. All right, now it gets kind of interesting. So now we're starting to get a. Oh no, this is a second sell label in YM, which we can trade. 37 seconds left. I'm gonna stay here and watch it. Doesn't hold. Six, 4, 5 seconds. Sell.
Order filled.
All right, we're in here. Limit is going to be 326, right? 66 is the stop. 26 is limit. I kind of a bad entry here. Was the close here? 42, and I came in at 36. So I was definitely off target on this thing. All right, let's see if this kind of holds out. No.
Stop filled.
getting retraced. And that's to be expected in a high volatility trade like today, where you're going to get, second label is the label I don't necessarily. I only like to trade the first labels, but I want to take more trades with you guys just to kind of show you the setups. And the second label is always going to be lower probability than the first, and it's going to be, of course, also hugely more volatile. So you see how in an environment like this, it retraces back up and then comes back down. There's nothing you can do. When you have high news, you're going to be much more vulnerable to volatility retraces. Simply because the markets are just going to be so much more two-way. It's like a 10-point candle, 1 minute candle in the S&P. You just see how much volatility there is here. Oh, there's a second buy label on gold, which we can buy.
Order filled.
The reason I'm buying it is because it's underneath the initial buy price. So, I'm happy to trade it. This is the MGC, so ignore the buy label. We're always going to go off the proper buy label here, and the target here is going to be what? I can't tell. 92.8, 92.8. $92.5 is the high of the day. Gold obviously getting the best juice out of this news because geopolitical risk, people are really running to gold. Does it go 700? Possible. And we're done on gold. Gold gets done. A nice clean trade as it's supposed to be. In the meantime, S&P after a 10-point move comes back down below. 4 minutes to the to ISM. Let's see the data set. We have Jolts and ISM coming up at 10 o'clock. Four minutes to go, so we'll see how it goes. We'll have to just hold back on the news. I'm sort of tempted. This is not really a trade, but I'm gonna get into it just for fun here on S&P. Let's see if I can just take that trade and just why did I take this trade? Okay, I'll tell you why. Usually I use 3 sell labels for a turn trade and then 2 greens as my confirm. But in this case, where the sell labels were so steep, I was like, okay, maybe we kind of oversold, and if I get a double green, it's a decent confirm. So I took it as a decent confirm, and that was a nice clean 250 to the good for us. So we'll take that trade. once you kind of begin to understand where the setups are, you can try to exploit them a little bit more creatively. All right, we got 2 minutes to the ISM. All right, let's see what's going on here. We're not going to trade till the news comes out anyway, so might as well just watch the ISM stuff. Oh, you got it, Ray. It was in your junk mail. Okay, good job. Good job. Yeah, sorry. I mean, usually that's what happens. Hey, guys. Fresh month. Be sure to lock in the Apex accounts. I'm just putting a link in there for you. All right, 1 minute to go. Let's see what happens over here. $54. The PMI was not great. The new orders were pretty weak, right? Prices paid. It's another thing that kind of want to look at. I have a feeling it's probably going to be okay, but if prices paid go 54 or 55, that's not going to be good news. Let's see. $19. Oh, don't forget, today is the second part of our is the second session of my fall session of Pass the Prop, the coaching session. So if you guys want to join, the first one was recorded. Be sure to join. Here's the link. All right, here we go. Prices paid much weaker. Employment really sucks. Construction spending really sucks. ISM weak. Interesting. Jolts pop. Interesting. What is that? How's the reaction here? Kind of positive. I guess they're happy the prices are low. Prices are low, and the market is reacting to that. But employment really sucks. Really came down. I don't know why you'd be happy about that. But I guess it's manufacturing. Nobody really cares about manufacturing. But price, really, really big decline. And this, I guess the market thinks, hey, that just gives the Fed plenty of room to cut rates. So market feeling pretty good about that. All right, we'll see. We'll see what happens. Gold comes off of that, of course, because inflationary, pressures. But honestly, nothing much going on over here. Buy label possible on the S&P. All right, let's get ourselves organized here on the S&P. Nope, goes to the red zone. We'll see. Let's see if it holds. All right, buy label. We're in, and target is 68.50. Now we'll see. Again, lots of volatility. Let's see if this holds me. 68.50 is my target. Nope.
Stock filled.
Okay, so dominant trend to the downside. Buy did not work, which means now I have to have 2 consecutive buy labels to kind of take any more buy trades for now. I will take buy reversal trades, but I will not take any more buy trades because now this just kind of shows me that the trend for the time being just not working. Also, again, as I said to you, huge volatility, right? If this comes back up and takes me out, takes me to profit, that would have been a tough trade. But if it stays red, that means the buy trades are kind of done for now. Market is feeling more negative than positive at this point. Sell label on gold. Nope, did not hold. Wait, was there another sell label on gold here? Was it flashing? No. Yeah, second sell label on gold. Let's watch this for a second. No, it doesn't hold. "13 seconds left." Six, five, four, three, two, one.
Order filled.
All right.
Order filled.
And that was super fast. Like I sold it and it got done. Let me show it to you. You can see it on the executions. That was, in at 78, really, really fast. When it goes, it goes. You don't hesitate. You take the trade. So that trade worked really nicely. So be it. All right, let's get rid of the executions so they don't pollute the chart. Equities not loving it today. What's today? Today is Tuesday. It could be Tank Tuesday. In the Tank Tuesday. If another buy label in the ES comes up, would I trade it? No. I want the buy label to actually physically show me that it became profitable. Right now, the dominant trend in the S&P is sell. So I'm taking the sell labels. Because once the buy label fails, which it failed over here, right? And it was a tough fail, I'll be honest with you. It basically took you out 68, takes you out at 63, and then comes back up to 70. So, it was just lots of volatility. But as you can see now, it's really starting to come down hard. So I absolutely want to be leaning short, not long right now. Fresh lows on the S&P, by the way. See if I can get any sell labels on the S&P. Nasdaq cracks the 20,000 barrier right here. I'm just going to sell Nasdaq for fun here.
Order filled.
On the small one, just for shits and giggles. I'll tell you why. Again, target is going to be what, 88.75. Let's see if that works. Because usually when it breaks the big round numbers, it has a little bit of a retrace, and then it kind of tests the lows again. So I'm betting on the fact that they're not going to be buying the 20,000; they're going to be selling 20,000. So let's see if that works.
Order filled.
And it does work. That was just a little cute trade on that. Now watching Nasdaq, watching the S&P to see if we can get a sell label on the S&P. S&P gives me a sell label. Now we're getting ready. We have 35 seconds left. Not a sell label unless it holds. Eight, 7, 6, 5, 4, 3, 2, 1.
Order filled.
In at 52.25, targeting 51.25, and that got done very, very fast. I'll show you how that got done. Let me show you the executions. And that was a good hunt of that trade. See, 72.25 gets done over here at 25, 250 to the good. Pretty clean trade, and it's probably going to break even further. When you're breaking fresh lows, I used to make this mistake all the time. The rookie mistake is to say, "Oh, I want to be buying it. I want to buy the lows of the day." It almost always inevitably helps to sell the lows of the day and wait for quite a long time. It may take another hour for us to see any kind of a semblance of a bottom, double greens, and only then begin to trade the long side. Like right now, it's the short side that was dominant, and you could have milked this for a lot more. Now, I scalp, so my idea is not to milk it, but you certainly could have pressed this for 4, 5, 6, 7 points if you wanted to on the large side. But this was like the first good-looking proper trade that I did. This buy was a legitimate trade, just simply didn't work. But this was like the right, correct trade, into a zone. And now you see, now you see why I saw that, the sell was the dominant zone now. Does that make sense, SP? There was a sell signal in the Nasdaq also, but we just we have to take one at a time. Actually, it wouldn't have been a sell signal; it's a third sell signal. All right, so here we can play a lot of fun. We can play some fun games. The Nasdaq has crashed, right? Third sell zone. If we want to trade reversals, we're gonna have to be looking for two green zones. A double green bottom here for us to kind of want to get along. So it might take us a little while, but let's see if in the next 10, 15 minutes we develop any kind of a bottom that's going to be tradable. Maybe around the 900, 800, 90 level, we could see some kind of a bottoming there for a turn trade. S&P goes green, which is fine. Like let's let it stay green. Let's see if it wants to revisit the red zone, because that'll be a follow on sell trade for us if it does. I was good. I could only wish that it goes green. It's so negative right now. So it'd be interesting to see. I mean, again, we're certainly due for some pretty serious correction on the equities. On the other side, the market just relentlessly bullish, right? They think interest rates, inflation has been whipped, according to the ISM data. Employment definitely slowing down. Now, I have my own macro prejudice. I'm happy to share it with you because I've seen a lot of these macro scenarios over the years develop. And so my view is like this reminds me very much of 2007, when the market was really, really booming. Then it kind of slowed down. The Fed decided to cut rates. Everybody thought that was going to be really, really bullish. And that was actually the start of one of the worst recessions we're ever going to see. And that's sort of, I think, how we're playing out right now. Like everybody says, oh, the economy is really, really booming, but job market is starting to shrivel up. The moment jobs shrivel up, everything else is going to be following on. And, any further rate cuts are just going to be desperate moves rather than, positive trades to the market. So can the market correct pretty, can we see 5,000 on the S&P before we see 6,000? Absolutely. So, that could definitely happen. As far as the markets go, today may be one of those days where we're starting to see the reversal of all this. It kind of dawns on the market. Employment really not as good as we thought it was. But it's manufacturing. It's really services that's really going to matter. So we'll have to see if services can still hold up. All right, still very much in the sell zones here. Testing the double bottom here at the 43 level. Not much happening. See if anything happening on Twitter. So we do it like, the other thing is we have the port strike. We have the Iranian news and, weak ISM stuff. Okay, sorry, let me read the, what are they saying? Big dip in prices and employment much worse. The comments this month are tilted a bit more bearish, and this one in particular speaks to those getting all bullish risk on the economy. Yeah, that's what I'm kind of trying to say to you, is that it doesn't matter if the prices are low because there's no demand, not because inflation has been whipped. So, all right, we're watching this. We're kind of hunting for a second sell signal for us, for a follow-on sell signal. So far, we don't have anything giving it to us. $291. trying to trade this short Dow. If I could get the trade in, to see if this thing stays in the red zone. It's a follow-on trade to this sell signal.
Order filled.
All right, short this. Target is 74.
Order filled.
And that trade worked nicely, as you can see. Nice clean follow-on sell signal. So when I stay patient, I'm not rushing, I'm not doing stupid stuff. Generally, the setup trades work very, very well, right? And honestly, like the big takeaway from all of this is to do. I do a huge amount of trades with you guys because I want you to see all the setups in action, so you kind of absorb the various possible trades and all the various ways to execute this. But the proper way to trade this is to actually do fewer trades, but only ones that are just premium setups, right? That are just crystal clear as a premium setup. We're going into green zone now. If this holds the green zone, comes back into the red zone, happy to short this thing as it comes out. We'll see how it goes. Yeah, the follow-on trade. So, like, let's look at the YM, and let me put this on the chart here as an execution. So you have a sell signal, right? So that's that. You can take it, or you can do the next trade. The next trade would be it goes green red. If it goes green red, you short the close of that red. The value of that particular trade setup is that if you miss the sell trade, you can set yourself up for this, for this particular structure, right? So like right now, we have a sell signal in the S&P. Now it goes green. Now, if it goes green, 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 and then it starts going red, that red signal will be a follow-on trade to this sell label, right? Especially since this is the first sell label in a cycle. It's the first sell label that we have. So, we can just watch this patiently and hunt this down, which is what we're going to do right now. Now, a couple of things can happen. This could turn into a pure buy mode, and you get a big buy label as everybody starts to kind of this thing bottoms out here at the 1030 level, and they start to try to rally it back. We'll see. If you get a buy label, it obviously invalidates the follow-on trade, so you're not doing it. Would I take the buy label? Probably not, because this buy label failed, and I really want to have 2 consecutive winning buy labels before I have any faith that this is going to be a buy dominant trade. Like right now, it's a sell dominant trade. A big pop off the bottom, like a 20-point move, right? 45 to 60, 15-point handle, big move. I'm going to get rid of the executions so they don't pollute the chart. We can just watch the chart cleanly. So this is the other thing I was going to say about gold. Gold is one of those trades that I find very, like, if you did a follow-on trade in gold, I guess you basically could say to yourself, the rule that we used to have is, look, if the candle is as large as your stop, this candle is 89 all the way down to 83. It's massively, it's much more, it's twice your stop. Then it's not worth taking the trade because you're just basically coming into the retrace signal. I guess maybe what we should be thinking about as an interesting idea. This is actually not a bad idea. So this would be the follow-on candle, but it's massive, right? So instead of taking the massive candle, you stay patient and you wait for the second follow-on candle, which is nowhere near as volatile, right? It's like, what is that, 87 to 83? It's still 4 points, still almost twice the volatility, but not as bad. And it definitely, if it's a second red candle off of this thing, you have some confidence that it goes short. So that's something to kind of look at as we go. All right, now we're starting to. Can we go into the red zone now? I'm watching the S&P follow-on trade into the red zone if we get it. And if we do, if it goes buy label, then that the follow-on trade gets completely invalidated. Sell.
Order filled.
In at 53, looking for 52.
Order filled.
And we're done. See that? Okay, again, just kind of wanted to go through this. Don't hesitate. Have trust in this setup, but wait until it's there. You got to just, pounce on it. It's really, scalping is the same thing as hunting, which is something I don't do, but like it requires the same kind of, skills. You cannot hesitate in pulling the trigger, getting it done. Once it got done, that was a nice, clean $250 trade, right then into the trade, 5 contracts. I actually want to start trading 10 contracts, but 53 to 52, boom. And of course it goes, it goes a little bit more. But why did it work? It worked because I was patient enough to work the trade flow. So now you see me actually starting to pay attention. Obviously trading a little bit better now on the moves. Yeah, I think after screwing around for a little bit, I deserve a little bit of this. Where is this? It's all my stuff. A little bit of this. Just a little bit. Right? Last half hour, that's all it's been. Just been this. All right, let's look at the NASDAQ, actually. I'm curious. So NAS is, 3-4 sell labels deep. So NAS, the reason I'm looking at NAS is there a possible reversal trade? So we have 1, 2, 3 sell labels, right? Now we have to be very patient. Actually, we don't even have to be that patient. I take it back. This is the first green zone. The second green zone would be a legitimate reversal signal for us. So as long as we get a second green zone here without triggering another sell label, this is the key thing. If I get a sell label, I need 2 green zones, to get myself back into a reversal. But if this thing comes back up to green, takes out the moving average, then I want to be long. Did you like that, Hawkeye? Scalp buy on gold. We should take it. We are there. Buy market.
Order filled.
I'm underneath the buy, you know, and we're almost, and we're done. And we're done. Again, so I know I'm making super fast trades. That's why I have to kind of do the, you know, the visual replay of what I'm doing. So let's kind of, you guys want to do a visual replay? Would it help if I did a visual replay on this? You guys want to see the visual replay of like my thought patterns here? Let me explain to you. Okay, so let's go through here. I wonder if let's do this super slow. Kind of like a, you know, 1x. Okay. Ooh, that went super fast now. That was too fast. I wonder if I can do this. 0.3 seconds. I don't know if this is going to be any helpful, but like, here's the point. So actually, you know, the way we're going to do this is this way. So I'm going to forward shift this, right, by one candle. And now we're going to see a buy label here. Here's the buy. Oh, it just goes right away. So this is the buy label, right? And then the price slips below the buy price. So as long as I'm underneath the buy signal, then I can go long. If I'm above the buy signal, then I'm chasing the trade. But if I'm beneath this, I came in here and then, you know, hit my target and I was there. Okay, now it obviously, you know, retracing. So anyways, it's kind of hard to do this on the replays, but that's, you know, that's what it was. Now we get a fourth sell label on NASDAQ. So that means now I got to have two greens, one green, two greens before I even look for a reversal trade, right? S&P, meanwhile, is flashing me possibly a second sell label. Would I take it? No. You know, again, it may work, but my point is I want now, like, you know, this trade worked, the follow-on trade worked, the second sell label is, you know, yes, fresh lows, and if it's definitely a momentum trade, it probably could work. I don't care. It's just too low probability for me for, you know, for possible retrace. What was this? You had been short here at 40.50, and you're looking for 39.50. Would it have made 39.50? So far, no. It might, you know, it might. We have to see. But still, you know, not a trade I want to be in as a follow-on trade. I'm a little bit more interested now in reversal trades. But reversal is a, you know, maybe a 10, 15 minute point in time away. So one of the cool things about all of this is that you have a scenario for how the market plays out price action, right? And you're kind of getting familiar with, you know, Act 1, Act 2, Act 3. Once you have that scenario really incorporated in your mindset, you can pre-prepare yourself. You can say, oh, you know, I'm going to be trading the reversal trade. I'm going to be doing this. And the advantage of that is that you don't have to do every freaking trade that pops up. You can just focus on the next clear setup. And doing it like this, 2-3 setups a day, you're much more likely to just simply hit those setups, you know, make your money. Like you can hit, I think I hit 3 S&P setups in a row. I'm not sure, but maybe, yeah, I think I did. If you think about this, let's look at my executions here. It's hard to say. Jesus Christ, it's like a frigging. Okay, no. So this was I got clicked on this legit clip. This was a miss. This was a win. This was a win, right? And by the way, look at this. Remember I said I didn't want to go for the second one? Look at the stuff here. You would have been stuffed right up your butt, as my wife loves to say, right up here, right up your butt. You would have been stopped out. That's why I didn't go for the second sell, because it was already hugely oversold. And I only want to pick like the first possibility in a scenario. Yeah, but this sell would have worked. This sell worked, even though it retraced hard against me. This sell would have worked, right? I don't know why. Oh, I bought this. Was this just me, playing cowboy over here on the buys. But my point is that, like, if you sort of focus on just trying to do 2 or 3 quality trades, you can just be done with 1,000 without having 4 trades gives you 1,000 on 5 S&P contracts, and you're done in an hour. It's instead of just constantly trading like a monkey. Is this a little cleaner for you guys, by the way? It's sort of like a really wide shot. I think it looks pretty good on the charts, right? No. So somebody's asking, what about a follow-on on the last S&P sell? If I didn't take the label sell, why would I take the follow-on sell, right? If I kind of think we're sort of done with selling, why would I want to take the follow-on sell? I mean, it may work, but like, again, all of these are weaker trades. It's a second follow-on in a second sell, right? I'm much more interested now. Okay, here we go. NASDAQ, second green after like massive sell. Is this a reversal? Let's see. Let's give it a shot. This is a reasonable possibility. 28 seconds. So we're just basically looking for the most plausible sells we can find, right? Now, again, you know what I hate about this thing? It's 77. Shit. Oh, fuck. See, this is, and like, would I take this trade? No. I'm gonna take it with you just for shits and giggles. But why would I not take this? Because this fucking candle is 1,000 points long, and if my stop is 20 and the candle is 40, I'm twice my stop. All right, let's go long here.
Order filled.
But what I hate about this, it worked. I mean, it did work. All right, fine. So I shouldn't be bitching. But one of the things that I don't like about that is it's just a massively green signal. But I guess after a massive 4 sells, it was still a good trade. Anyways, again, hunting a trade, finding a trade, killing a trade. That was the key, right? The most important thing here was that this was a plausible reversal pattern, right? It gave you the most plausible entry. The only negative thing about this was like a 40 candle move. I was able to get it on the retrace, which was the one fortunate part of it. But buying it at the top of that candle would have been much worse from a risk reward point of view, and I probably wouldn't have done it. So yeah, sometimes even when you get the setup, if you don't have the candle, it's probably not worthwhile to take the setup. But this time, it worked. YM is a buy. Now, this is a good test. Is this a buy? Should I be buying YM right now? Yes or no? I'm not even doing a poll. Should I be buying? Yes or no? Tell me, according to my rules, should I be buying? And it doesn't matter that it works. It doesn't matter that you would have made money. The question is yes or no. So somebody said yes. No, you don't. You know why you don't buy it? Because the buy entry was at 94. And I would be buying at around 405. I'd be buying like 5-10 points higher, right? Yes, I got lucky that the thing went up. Now, if the buy entry was 94 and the price now is 90, yes, I'd be buying it. But if the price is above where I should be, no, it's not a trade. There's no point in me making this trade. Also, it's not a trade for a million fucking reasons. Oh, no, actually, in the YM, it would have worked because if you went buy here, that actually worked over here at the 10 o'clock hour. I was going to say, because the prior buy wasn't a really legitimate trade. But this was not, again, if you weren't here at the start of the buy, you shouldn't be here in the middle of a buy. You just want to be very, very, very disciplined about your entry structure. I know it's hard, man. You really, you always want to trade, but it's always actually much better to have reasons not to trade than to trade. No signals in gold. I got about 5 minutes to hang with you guys, and then I have to go. What are we looking for? Oh, we have a buy signal in the S&P. Is it a buy signal? No, it's not, because the prior buy signal blew us up, so I'm not taking it. However, I was going to say if I get a double reversal signal, yes, I would take that. But now it's just a buy signal. Tempted as I am to want to take this, I'm not taking it. It doesn't matter if it works or not. I want to be confident that this is actually a reversal in the S&P. This still could be a weak buy where the S&P just makes a pathetic little jump. On the other hand, this thing goes red, comes back up again, becomes green. I'm definitely taking it. And the reason why I would take a reversal buy versus a buy label is because buy label has got a momentum aspect built into it. So I'm naturally going to be buying it pretty high. So I have to have confidence there's going to be continuity. Whereas a reversal buy is going to happen right at the moving average. So I don't have to do much to make money. It just has to go a little bit above the moving average, to get it done. But it's a moot point, because if this is a buy label, I don't have a trade. I'm not taking it. We had a lot of ES trades. Look at all the ES trades I have here. Do you not see all the the thing looks like St. Valentine's Day Massacre? We had 4 or 5 ES trades here today. This is a pretty good looking buy label, I'll be honest with you. But I'm not going to take it. But I do think it's reasonable that you're going to have some continuity here. So if this thing closes, do I think it's going to give me a point? It probably will. All right, trade is 60. Would it go to 61? I'm pretty sure it will. But, we're not going to take it because the prior didn't work. And it does go to 61. It does, yeah. I mean, depends how disciplined you want to be. But you can sometimes tell that, yeah, this momentum there's enough momentum here to make that 1 point in the S&P with relative ease. Oh, yeah, no problem. You can watch everything on replay. The first half of this show was horrible. I took a whole bunch of stupid trades, and then it got compounded by the fact that we had lots of retrace trades where even the good trades got stuffed out. And the second half of the show, I really, really focused on entries and, BFF, be fucking focused. I really need to, just start the show with that mantra. Because the moment I turn into BFF, I turn into your BFF, right? I make all the good trades. But when I get loosey goosey, I'm going to get just side swipe left and right. So yeah, second half of the show had a lot, 4 or 5 consecutive winning trades. Yes, BFF is our mantra. I think I'm gonna have my designer create a watermark. I'm just gonna keep the watermark on here as a permanent mental reminder to all of us. I definitely want to do that. I think she did I think I could put I should get a great idea, because she did a whole design for us. I can totally put an image on here, right? And we could keep it on the chart. That will keep me from doing stupid things. So yes, you see how this buy was good, just barely enough for a point, and then it would have come back and stopped you out. That's why it wasn't a high quality trade, right? That's why I'm not I'm not sorry that I didn't take this trade. All right, guys, I got to run because I got a meeting. Save this today. We're definitely trading tomorrow, but Thursday we're not going to trade. Okay, so there's no trades Thursday, and we're definitely going to trade Friday, which could be non-farm payrolls. We're going to trade the news. So hopefully, the world will be quiet until then, but we'll see. Otherwise, everything is all copacetic. Everybody have a great, great day. Thank you for everything. Here's all the links for everything if you need them. And I'll be doing coaching tonight. And we're going to be talking about fucking BFF. Oops, sorry. I keep screwing it up. PTP. Here's my passive prop. Thank you, guys. Everybody have a wonderful, wonderful day. Enjoy your day. I still think there's probably a ton of profit to be made. We could reverse this whole thing, and this could be massively, bullish bias. You get double buys over here, get long and strong. We'll see how it goes. You know that the market, it's like Florida weather. Just wait a minute, the weather will change. Just wait a minute, the story will change. So we'll see how it trades. That's our most important thing, is that we're always willing to entertain the opposite scenario of what's happening now. All right. Everybody have a wonderful day. Everybody enjoy. I'll see you guys tomorrow. Take care.